Hello and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct. The RBA opted to leave rates unchanged at 2.25%. For a little bit of a rundown and to see what markets make of this, I spoke to Katrina Ell at Moody's Analytics. Katrina, always a pleasure to chat to you. Thank you so much for giving us this post-RBA rundown.
Well, thanks for having me again.
No worries. Now let's look actually ahead of the RBA meeting. Why were market insiders so unable really to reach a consensus on this decision? Is it perhaps due to a lack of RBA policy guidance?
Well, I think the Reserve Bank of Australia was deliberately vague on what they were going to do in their March monetary policy meeting, simply because they weren't sure. At the moment, particularly, there's so many moving parts and so many uncertainties. They weren't sure how the economy was tracking in the early months of 2015 and what international developments were going to occur. So they really wanted to leave themselves open and not commit to any particular move.
Now, on the actual no change decision itself, the ASX plummeted away from that 6,000 mark. The Aussie dollar, on the other hand, soared. Did this really take the wind out of investors' sails, really?
Well, financial markets had about a 60% chance of a 25 basis point rate cut happening in March. So it was really disappointing for investors when they saw that the cash rate stayed on hold at 2.25%. So it wasn't surprising then that the ASX plummeted about 1% and then the Australian dollar soared. And that would have really been disappointing for the RBA because they're trying to be on the front foot, trying to dampen the currency to help the rebalance away from mining investment towards domestic drivers.
It had been thought that the current housing market scenario may really be a key driver for the RBA to act. Naturally, they didn't on this occasion. Economically speaking, what are the central banks seeing?
I think the Reserve Bank of Australia is really quite concerned about the housing market. Probably not nationwide, but there are certainly some really worrying pockets. House prices in Sydney are rising quite strongly. Auction clearance rates suggest this is going to continue, and at the same time, investor participation is rising. So I think certainly they are worried about the housing market, and that could impact some rate decisions going forward.
So what is next then, really? As you said, we've got some impact on rate decisions moving forward. Will investors have sort of a sell-by date on when they perhaps see the RBA next moving?
Well, we expect that there's going to be probably about another 225 basis point worth of rate cuts occurring in 2015, and financial markets think the same. We think probably one in the first half of the year and then another in the second half of the year. And this will really help give the stimulus to the non-mining sectors of the economy, which is still struggling and really need to improve further to pick up the slack from mining investment no longer being the growth driver it once was.
Katrina, always wonderful to receive your comments. Thank you so much.
Thank you.
Katrina Ell there of Moody's Analytics, forecasting another 2 rate cuts before year end. That is all we've got time for right now, but don't worry, I will be back with plenty more exclusive interviews right here from Sydney, Australia. For now though, it's goodbye.